Chartwell Retirement Residences posted its third quarter results last week. Cash flow topped the average analyst estimate, and the company said it expects occupancy to increase to more than 90% by December. Let's get more from Vlad Volodarski, the CEO at Chartwell. Thanks very much for joining us this morning, Vlad.
Good morning, Andrew.
And I know this is old news, but just remind us, so you're all seniors housing now and you're entirely out of long-term care?
That's correct. We predominantly private pay retirement living company now.
And so these are older people who are relatively healthy, so you don't need such high staffing levels or costs to house these people?
That's correct, although we do serve people of different needs in our retirement residences, all the way from senior apartments who require very little assistance to assisted living and memory care settings where people need a lot more help.
Just looking at your stock as well, then you've now risen above to where you were just prior to the pandemic. Okay, we can see, and your shares have jumped nearly 40% this year, excluding your dividend. So remind us how you plan to increase your asset base. You have been pulling off acquisitions, but I think your actual development yourself is on hold. You're waiting to restart that actual development of properties yourself?
That's correct, Andrew. During the pandemic and post-pandemic, the construction costs increases were such that development has become not feasible, and there's very little of new construction starts that's been happening over the last 2 years in the whole sector in Canada. The new construction starts as a percentage of inventory right now below 1%. That is all-time low. Construction starts. So we've been focusing on building our portfolio through acquisitions. We were fortunate enough to be able to source quite a few of those acquisitions. This year in particular, this will be the record year in transactional volume for Chartwell. We have announced now the transactions that are valued over $1.2 billion. So our investment team has been very busy and successful this year in creating that. In addition to adding new properties to our portfolio, we are also optimizing what we already own, where we are repositioning some of the properties that we operate and divesting properties that we do not believe to be core to us over the long run.
What kind of properties would you divest? What kind of assets are you less interested in owning?
We're trying to build portfolio with newer properties that are more efficient, larger, require less capital investments over time, and divesting properties. Usually these are smaller properties in secondary or tertiary markets that are not very efficient to operate.
I know that you have quite a few, or your industry has quite a few newcomers to Canada in the labour force. Will these immigration cutbacks and reductions in temporary workers, will that create any kind of staff shortage for you?
We don't expect that to have a significant impact. We do rely on, like everybody else in Canada, rely on immigration to support our workforce and economy. And the reductions that are being announced in terms of the immigration levels, we got to put it in perspective that over the last 3 years, the country took close to 3 million people, which normally takes 8 to 10 years to assimilate, and we did it in 3. So the reductions being announced are from these high levels. We expect that there continues to be immigration to Canada, and we will be, like everybody else, benefiting from that.
What percent of your workforce would you say is temporary workers, even ballpark?
We do not employ a lot of temporary foreign workers. Most our workforce are Canadians, often new Canadians that come to the country. We often are the first or second job that people have. Many of them stay with these jobs, and that becomes their careers. So there is not a huge reliance on temporary foreign workers in our sector.
You just bought, we talked about your acquisitions, you just bought, or fairly recently, a property in Victoria, 131 suite, independent supportive living residence. Interestingly though, it's only about 28% occupied. That didn't give you misgivings buying a place that's so empty?
Not at all. In fact, we like, to some degree, acquiring properties that are not at stabilized occupancy. This is a newer property. It's a couple of years old, And we feel that we can create quite a bit of value for ourselves and our shareholders by changing the operating model in that property and employing our marketing expertise to lease it up and create value. Victoria market is very interesting. We did not have a presence on Victoria Island, Vancouver Island, until this year, and we now have 4 properties, or will have 4 properties by Q2 of 2025. And those acquisitions allowed us to enter the new market for us at scale that allows for operating efficiencies, which we're very pleased with.
As far as I can make out, you have not increased the dividend since 2020. Your yield, though, is not bad. It's something like 3.8%. Do you plan to increase the distribution in the near future?
Once we reach high occupancy levels and deliver cash flow growth that we think that we can deliver, we certainly will consider increases in distributions like we did in the past. We had a pretty strong track records of distribution increases. I think we started in 2014 and then grew them all the way to 2020. Then, of course, pandemic put a pause on that. We chose to maintain our distributions during the pandemic, where many other companies decided to reduce their distributions. We still need to continue growing our cash flow before we can start increasing distributions.
TD says that they're increasingly confident on you guys reaching 95% occupancy, or you have a target there, by Q4 of next year, but you hope to get to 90% by the end of this year?
Yes, our forecast is to get to 90.2% by December of this year. We've seen very strong occupancy growth over the last 24 months, in fact. And what used to be aspirational target of 95%, where not many people believe that we could get there, seems much more in sight now. So our expectation and drive is to get to that 95% occupancy by the end of 2025.
Vlad,